Hey traders, Raghee here, and we're going to take a look at crude oil. It's one of our long positions in front of tomorrow's inventories numbers, which are the EIA numbers. This is the Energy Information Administration. Now, one of the reasons I keep an eye on this is not because this is the end-all be-all for crude oil data, but because this is kind of part two of two economic events. Now, you'll notice there's no economic event here today for Tuesday, but what comes out Tuesday are the API numbers. These are the private inventory numbers. And a lot of times when traders take position in crude oil, we're in the March contract right now, when they take a position in crude oil, they neglect the Tuesday volatility that they could see leading into the Wednesday data. So there's two ways you can manage this. One is just be aware in front of the API data, you need to be calibrated. When I say calibrated, I mean be in a heightened expectation of. In other words, you know that the market could move with a lot of volatility, and you quantify that volatility to about 45 to 52 cents. So you're ready for a quick burst of volatility with that data. Now let me show you what happened when the API data hit the market and what traders are going to be expecting from the EIA. So here's the data. I mean, you can see the candle very, very clearly. And this is what I mean about the impact. Take a look at the high for this candle. And what I'll simply do is I'll take the high, which is 63.84. You can write that down if you'd like. And I subtract the low, which is 63.40. Now, I just mentioned that I should be expecting what? I know that the market will likely put in most of the hourly price movement range for that time of day or for that symbol right near that hour. In other words, as that data comes out, what did I just say? I'm calibrated to about 45 to 52 cents. We moved 44 cents in that moment. Now, if you are ready for one, the API data to hit the market, and two, you know just how much it could move the market in that range. When this happens, if it moves against you, you have a framework for it. And when it moves in your favor, you also have a framework for it. Now, luckily, and this is by design, we are long crude and we were able to benefit from that 44-cent move. And this is from a 63.67 entry that we alerted members to yesterday. So what's really nice is we've pulled away from the wave at this point, and then some of our members even put in a trade at 63.25. So this is even better. You know, some traders are looking at a much nicer cushion. So between 63.25 and 63.67. Another thing I want to bring up here is people ask me as far as, hey, how much heads up, how much alert will I get before the market moves to an entry? In other words, how much time will I have to be able to make a decision? Now, I want you to notice we've been talking about crude since the 31st of January, and we've been looking for opportunities to get long. This particular alert went out yesterday, and you could have taken 63.67 yesterday as well as 63.25 today. So very often you will have anywhere from 3 to 8 to even 24 hours or more before the alert is going to be a trade. In other words, it goes from our radar to a triggered trade. And that's very important to me. I call that shelf life, right? How long will these trades be good for? And I think it's very important that you guys do not get, hey, get in now type alerts from me. I know that a lot of people are working. There's the part-time work. There's full-time work. Not everybody has time to be in the chat room. And that's where I think having the notes that we send out, the alerts on our app, as well as our alert log becomes very important. So just kind of a heads up on how we make sure you're able to capitalize on moves like this. So let me come back to the API data for a moment. So we've already gotten that move, and what's happened is we had a surprise draw in crude. We have a draw of about just over 1 million barrels in gas, about 250,000 in gas. 1 million in crude, 250,000 in gas. So this is how the market's going to prepare for tomorrow's EIA. So if you're playing the EIA data and you don't already have the API numbers in mind, you're going to be at a severe disadvantage. So this is how we're going to set up this trade again for 10:30 based upon what we already know the market has. In the meanwhile, it's a nice little cushion before we go into tomorrow's data. It's an overall trend follow. So I think, of course, we have the wind at our back, and just kind of do a little bit of a deep dive here on crude. See you in the next update.